afternoon. You're watching Closing Trades right here in ET Now with me, Aisha Faridi, Ajay Sharma in the studios as well. And we're holding quite steady actually. 22,450 is what we're clinging on to the index ahead of expiry tomorrow. Metals, of course, that's the one sector which is on a flare. And it's not the big boys, but it's actually the likes of a SAIL, NMDC, Jindal Steel. They are the ones which are actually leading the pack. Cipla, of course, is seeing quite a peculiar move. Not to say that Pharma is not making a comeback, but in specific, Cipla is the one which is on a tear. And today, it's the top index gainer. Almost a 4% bump up on the futures is what Cipla is currently sitting on. That's not quite the case with yesterday's mover. That's Bharti. That's at best trading flat, although the stock is still pretty much at record high levels. But they clarified that they're not in talks with the Vodafone Group, and that move on Bharti has somewhat consolidated in today's trading session. But lots of lively movers from within the broader end of the market. You just heard the numbers from Heineken Global. A decent uptick in the quarter gone by. UBL, United Spirits, they're all the ones which are jumping up quite smartly. Chambal Fertilizers, HAL. Continues to be a very buoyant broader market.
I think people are now realizing, looking at the way United Breweries stock is trading, that this is also, if you can't buy an air conditioner, at least you can buy the other alternative for a half an hour. So that's why I think the volumes have, grown almost twice of what the estimate was, 2.1%, 8% rally coming in. The beer volumes in India, as per Heineken, were 5%. So people who can't put in 25,000 for an air conditioner are going for the relatively lower option. It looks like chilled brew over over friends. But that apart, the other interesting thing is the way metal pack has come back. So metal companies, particularly steel, has actually come back in style. You may say that, look at that. NMDC, of course, is non-steel. But SAIL, JSPL, I don't remember the last time I saw 8% up move in SAIL. But Tata Steel, JSW, JSPL, everything has gone up. I will get you some commentary from Tata Steel on steel volumes in India this quarter in some time from now. But that is definitely one area which is sparked up. But mid-cap, small-cap in general are doing phenomenally well for a third day in a row. In fact, that entire weakness of mid-March triggered by SEBI comments or AMFI stress test issue, all of that has been bought into. And the kind of holding on to some dip coming in last 5 minutes, but generally that space is outperforming. Kunal is also here. Kunal, how do you see the setup so far?
Well, so far it's good because the action is more towards the mid caps and small caps. I think the third consecutive day where you're not seeing any major activity across the large cap space, and you've seen that the likes of HDFC Bank, Reliance, ITC, etc. Many of these stocks have gone to just about a patch of consolidation. Yes, there have been some green shoots emerging. That the likes of Kotak Bank is coming back towards a breakout mode. ICICI Bank is also trying to near that 1100 mark in terms of a breakout. But then we'll have to wait out for a point where these stocks get a follow-through up move, devoid of other larger cap names participating. So I think it's more of a stock-specific market and specifically towards the mid caps and maybe fewer large cap names.
Okay, since we're on the subject of metals, it's important to get a voice in, and my colleague Bhavya just yesterday caught up with CEO and MD of Tata Steel, TV Narendran, on India's steel consumption for the fiscal and India's ambition, of course, towards being self-sufficient in producing steel products as well.
Steel, we have enough consumption growth in India to take care of what we produce, but eventually India can be a big exporter of steel as well.
So local demand of steel is also seeing a buoyancy. So how is the industry actually planning to and preparing to meet this demand?
I think in the financial year which has just ended, the steel consumption has grown at about 13%, which is good. It's the way it should be because for a growing and developing country like India, the steel consumption should grow faster than the GDP growth rate.
Any incentives that you think can give boost to the steel industry currently in India?
I think the most important thing for the steel industry is for the country to continue to invest in infrastructure because firstly that creates a demand for steel and secondly it reduces the cost of moving raw materials and steel around because oftentimes we are very competitive within a factory. We should have export-led growth, but we should also leverage the opportunity that there is in the domestic market in India.
So that's the view on steel demand supply scenario, and steel stocks are doing very good right now. But Siddharth Khemka is joining us now, Head of Retail Research at MOSL, and Nuresh is also here. Both of you, thanks for your time. Nuresh, your view. In fact, the last 2-3 minutes, there's a sudden crack which have come in Nuresh, do you think it can get accelerated, or till morning we were almost readying ourselves for 22,500?
Been seeing this downticks all through this recovery, but we've not seen a sharper continuation follow-up. So again, stock-specific trends still remain positive. The index is still struggling, but if you look at the mid-cap and the small-cap indices, today even the BSE small-cap index hit a new all-time high. Yesterday it was Nifty Smallcap, and now the Nifty Midcap is yet to do that. So overall, time to be more stock-specific. And the heavyweights are not yet coming up. So you have HDFC Bank struggling at 1,500. You have Reliance struggling at 2,900 odd levels only. So once we see leadership coming in from any of the heavyweights, we could be crossing well towards the 22,600, 22,800 mark also.
In fact, just want to mark what the fall has come in at. While, of course, Tata Consumer has been a rank underperformer from the word go after its numbers. Look at a Bajaj Auto that's lying absolutely flat. Nestle is absolutely flat as we speak right now. Tata Motors, ITC have all cooled off from the top of the day. SBI is now drifting towards the red as we speak right now. Maruti as well is seeing weakness. We just flagged off Reliance too. That's also fallen about 0.5% or so. And of course, technology has won very heavy on the index as it is today. So what's your opinion of the market right now?
Yeah, hi Aisha. So if you look at the overall setup, I think the market, we continue to remain positive on the overall outlook on the market. We have seen the result season so far being more or less in line to better than expectation, barring some sectors. For example, you have IT, which has been kind of weak. Consumer was not expected to be very strong, but there was a hope that the commentary would come around the recovery post the monsoon, which the IMD has given a forecast of a above normal monsoon. But if you look at some of the larger sectors, for example, banking, auto, cement, capital goods, these sectors continue to report strong numbers, and on back of that, we believe that market could continue to see the uptick. What is also happening is that in the broader market, select names or select themes are something that the market is picking up. For example, today we are seeing a lot of momentum in metals, and that is largely due to what is happening globally. The dollar index is at a 2-week low, and we know that the metal prices have an inverse correlation with the dollar index. So that gives an uplift to the LME prices. And we are seeing the stimulus and the recovery in China economy, and that is what the hope is that metals could do well. But if you look at the results expected from the metals companies for the Q4, we are expecting a dismal quarter on a high base. Things could look weak. Margins are expected to be lower. Realizations are expected to be lower, and we are expecting a decline in an overall aggregate PAT. So something like what we saw again in MCX. The story was of newer product launches that the market liked, but the results would start coming in from over the next couple of quarters, and hence more of a long-term or back-ended growth rather than the near-term growth.
Siddharth, what are your top picks from the cement space? Look at how ACC has shot up almost 5%. Adani Cements, Ambuja actually is at a lifetime high. Some mid-tier cement names, Orient, etc., are doing well. Which is your favorite side of the market here in cement?
Yeah, so I think, Ajay, if you look at cement, the best player has been Ultratech across cycles, across regions, and across market, which continues to be our preferred pick within the overall cement space. We have a target price of 11,300, which is a good, decent upside from current levels. If you move a little further below, we like Dalmia Bharat. We like JK Cement between in the mid-cap space. Both are in different regions, and again, some of these sectors, regions where they are there, we are seeing the good improvement in demand. Although realizations have not improved thus far, but the major benefit that they're getting is A, strong demand, and B, margins have come up better. So EBITDA per ton is improving on a sequential basis. Plus, the most important factor is that the real estate demand has been pretty strong, and we are seeing company after company reporting the record pre-sales data. So that is something that keeps the cement sector in focus. So large cap, we like Ultratech. In the mid cap, we like Dalmia Bharat and JK Cement.
Look at some of the other bazaars in trade. Look at a Chennai Petro, for instance. That's seeing a solid earnings reaction. The stock is shot up about almost 16%. They've seen a revenue uptick of about 2% on a sequential basis, but the EBITDA has seen a jump up of 53%, and that's on a sequential basis as well. There's been a decent margin expansion that they've seen, a 55 rupees per share dividend, and a 20% decline in the net debt is what they've seen. So quite a blowout quarter by Chennai Petro. 10.5 million shares traded. It's so, the bump up in the stock is coming in on the back of some decent volumes today. MCX though, that's down about 4.5%. The numbers were okay and the gold rush clearly continues. But Morgan Stanley says that, according to them, the numbers haven't quite matched up to what they were anticipating, and they maintain they're underweight with the target price of 20.85 on MCX as we speak right now. Kunal, two questions for you. A, of course, the charts of Chennai Petro, and B, what's the best way to play gold? Buy gold?
Yeah, buy gold, but I think right now we are into a point, Aisha, where the gold on the dollar-denominated prices are going through a corrective phases. I think that this correction is so far just 7% on the dollar prices. I think from 24.37 approximately, we have hit 22.90. The last I had seen on the gold prices. I would believe that at least another 3 to 5% correction is still pending in terms of the gold denominated prices, which means on rupee terms, we should be looking at maybe a 68,500, 69,500 kind of a level to be hit on the Indian rupee prices. Maybe that could be a very good point where you may look to buy gold in terms of the rupee terms. But I think on Chennai Petro, on the other hand, I think it's a classical sign that Chennai Petro, MRPL, many of these stocks have gone through a very trending kind of a breakout, because if you look at the last, same time last year, these stocks were closer to 450, 500 odd levels. They've moved in a stronger kind of a trend phase. There was a patch of consolidation where these stocks remained to a very tight range. And remember, these are very high beta stocks, because when they get into a breakout mode, it's like the metal or the real estate sector. When these stocks get into a breakout mode, these breakouts could lead to the stock moving up higher by a margin of 30 to 50% in just a matter of few odd weeks, few odd months. So I believe that we are at the cusp of a very similar kind of a breakout for Chennai Petro, MRPL. So I think traders can look at a buy at current levels also.
All right, gentlemen, stay with us. We'll take a short break, come back, and more specific trading ideas on the other side. All right, let's get you an exclusive story coming in. Samir Dixit is joining us from Delhi. The sources are telling Samir that the food regulator has now expanded the scrutiny over added sugar and salt in infant food across categories in many companies. Samir, tell us, what else do you bring to us?
Yes, definitely. After the Nestle case incident, where we have seen that the Swiss investigative organization, they raised this point that the Nestle baby food item contained added sugar, which are being marketed in Asian, African or Latin American country. Now that raised many questions, and it's the fallout of that particular case that now here in India, the food regulator FSSAI has expanded its quality checks on other brands as well, including Nestle. What we are picking up from our sources that the quality checks have been carried out on the baby food item that is being marketed by other brands, whether it be Patanjali, Dabur, ITC and several other brands which are having baby food items for the children of age 0 to 5 years. And sources have informed that these quality checks, random sampling, it has been started. The regulator is targeting, they are aiming to complete the quality checks within 2 months. And this quality check is to check that what sort of added sugar, the quantity it is there, and not just the added sugar, it is also about the salt content as well. On 3 levels, this quality check will be done. First is that what sort of content it is being added. Second is the labeling, and third one is the packaging. So whatever the content it is being added, it is as per the standards or not. The packaging, whether it is giving the right information or not. So these sort of quality checks is being carried out. The random sampling has been started. The product of these baby food items of various brands, they are being picked up from several markets, and quality checks it is being carried out, and the regulator is looking to complete the checks within 2 months, and then further action will be initiated.
Right, we leave it at that. Thanks so much. That's some clarity coming in on the allegations made by the FSSAI. in terms of the eligibility of some of these FMCG company products for children in specific. But that said, today, of course, you've got Axis Bank, which is due to declare its numbers. If we can quickly, take it across to Gaurav as well and try and understand what we can expect from Axis Bank. He will just come off, next and highlight what to expect from Axis Bank. Of course, we've seen that there has been not much of, excitement post HDFC Bank's performance. Axis, though, is going in better into its numbers, holding up about 1%. 1,064 is where that stock is. Gaurav, what is your poll penciling in for the numbers?
Well, yes, Axis Bank will come up with their Q4 updates, and if we look at the consensus estimates, now they are expecting 1.9% of a growth on a quarter-on-quarter basis in net interest income. They are expecting some kind of moderation because of the decline in CD ratio and higher LCR ratio in this quarter. But apart from that, PPOP is expected to grow by 1.5%, and lastly, PAT is expected to grow almost by 2.4% on a quarter-on-quarter basis. Now, we actually cannot compare the YOY numbers because we saw that there was an expense, one-time expense in 4Q FY24 for Citi's India consumer business acquisition. But apart from that, if we look at the advances and deposits, now consensus is expecting advances to grow almost by 4.3% on a quarter-on-quarter basis, while deposits are expected to grow almost by 5.5%. They're expecting CASA mix to remain stable or maybe increase by a bit in Q4 FY24. And if we talk about the net interest margin, based on all these data, NIMs are expected to decline almost by 10 bips on a quarter-on-quarter basis to 3.9%. Lastly, coming to the asset quality, they do not see any kind of risk in asset quality. In fact, we may see decline in credit cost in this quarter, but the key monitorable would be the fundraising plans, because we saw that during the filings they said that they may also opt for QIP or rather take an approval for QIP. Apart from that, any kind of outlook on growth will be important for the bank, and lastly, any kind of outlook on cost of deposits will be important from the management, because this will decide a pathway for the bank going ahead. So all in all, keeping an eye on Axis Bank on the back of the Q4 results which are coming ahead.
Right. So in general, good set of numbers, but at the same time, look at the last 1 month. A lot of the street is already expecting a good set of numbers. So that is something to watch out for. Siddharth, I want to talk to you about Cipla. There's a tactical upgrade by another brokerage firm, but the view is that 25-26 could actually see upgrade as far as the earning estimates is concerned. Have you looked at Cipla recently, especially last few quarters, the kind of quality of numbers they've declared?
Yeah, Jay. So I think among the pharma stocks, if you look at the overall aggregate as well on a sequential quarter basis, the earnings growth is kind of improving, and that is giving a lot of focus from the market to look at some of these names. And within the overall healthcare space, you have the traditional pharma companies, and B, you have the hospitals or the healthcare companies. And the healthcare companies have their different story. They are reporting growth. But if you look at the core pharma companies within that, Cipla is something that we have been liking a lot. In Jan, we kind of recommended Cipla as the stock, as one of the stocks for the year 2024. While Cipla is working to enhance its prescription base, it is also working to strengthen its generics and the consumer healthcare business, especially in the India business. So what we are expecting is a steady 12% sales CAGR within the India business. And even in the US generic business, some of the newer launches, the injectables, inhalation, so those products launches are also helping 8 to 9% growth in the US segment. So overall, as I said, Cipla remains our preferred pick in the large cap pharma space, given its growth in India, its robust ANDA pipeline, as well as its de-risk regulatory factor due to the filings from various alternate sites. So a steady earnings growth of 13%, but a preferred pick within the overall pharma space.
Right, okay, that's the take coming in on Cipla, and Cipla, of course, is the strong one today. There's also Chambal Fertilizers holding out very strong. There's UBL, which is holding up now at the session highs, about a 5.25% uptick coming in. And HAL as well is the other one, Hindustan Aeronautics, that's also inching towards that 5% gain mark. Naresh, come in on some of these buzzing names, a UBL, Chambal or a HAL?
So Chambal is what looks interesting. The stock has finally broken out after a long period of consolidation. The stock has gone. The stock was last at 400 rupees back in 2021. In the last 3 months, it made a consolidation between 335 to 385, 390. So finally, a 52-week high, a good breakout. This could slowly and steadily head up towards 450 in the short term, and then 480. United Brewery saw a spike today, but finally the stock has broken out above the 1900 mark. Over the last few months, it has had a few false starts. So 1750, 1800 is where it topped out in 2021, then in 2022 end. And even in 2024 start, we topped out. So finally, it is sustaining above the 1900 mark. Could be a start of an uptrend, which could slowly and steadily take it towards 2200 odd levels.
Well, the results of 361 today triggered a big move. The stock at one point in time was higher by almost 13%. But what is happening is that Nuvama Wealth also has shot up. You saw NAM India shot up. A lot of asset managers are doing well. On the charts, which one looks strongest to you?
So 361 is Nuvama is amongst the strongest one. I think even Edelweiss as a stock has also done reasonably well. I was looking at NAM India as a chart, and I remember I think the stock was almost at 275, 250 just about 3-4 quarters back. That stock has done exceptionally well. Third or fourth consecutive quarter where the stock has moved up to 500 plus mark where it's trading right now. So I think that's also another stock which has done reasonably well. Now, maybe as a fresh buy, I would probably look out for Nuvama as well as Nippon Life, NAM India. These are the two names which I would believe could hold merit even from current levels. They have this odd habit of going into a price-wise consolidation, not a major price correction, is what we've seen for these stocks. So I think maybe a consolidative zone of couple of weeks and a price correction of maybe 3-5% could be taken as a good buying opportunity.
Yeah, in fact, for 361, the revenue from operations has seen an uptick of 46% on a year-on-year basis. The PAT saw 56% surge coming in. The ARRs, that's annual recurring revenue, that also has seen quite a bit of uptick. Also, the first interim dividend for the financial year as well was declared by them, about 3.5 rupees per share as well. So 361, of course, holding out very, very smartly in trade as we speak right now. But what's clearly not looking good is the entire IT pack. I mean, you saw the numbers from Tata Elxsi, Wipro, Infosys, TCS. Clearly, the street doesn't seem much enthused by that. LTI Mindtree is going to be declaring its numbers. And tomorrow, of course, you have Tech Mahindra as well. And I think Mastech also maybe. Zensar Tech, I beg your pardon. That's also going to be declaring its numbers. So that clearly, the market has written off IT and it's not in a hurry to even buy any sort of dip or latch on to any glimmer of hope also that the management indicates. Case in point being TCS.
Yeah, Aisha, I think the street before the result season started was a little bit hopeful of a recovery in the second half of FY25. If you remember, Accenture had earlier downgraded its guidance. The street surged off that, thinking that Indian companies might give some ray of hopes, but we have seen the revenue growth guidance cut by Infosys. That was not gone well by the street, and the management commentaries of the IT companies that have come out so far. It's only leading to a downgrade in earnings estimate for FY25. And we had seen some hope recovery in the IT companies in terms of valuations between the two quarters, where, as I said, we started expecting some recovery and that hope is now dashed. So on a long-term frame, the order book continues to remain strong. The business model is good. But in the near term, next 1 or 2 more quarters of pain is there to be endured by long-term investors. So someone who is looking from 3 months, 6 months perspective, I think IT could continue to remain under pressure.
While auto stocks have done well, one of the auto stock has gone into a sideways consolidation for a long time, and that's Escorts Kubota. They've recently taken price hikes as well, higher by 1% today. Have you looked at the valuations of this one?
Yeah, I think if you look at the overall tractor space within the auto space, I think last quarter itself, Mahindra and Mahindra had kind of lowered the overall industry growth numbers for the tractors, and that was something which kind of continues to remain within the 3 packs, that is the passenger vehicles, the two-wheelers and the tractors, continues to remain the most under pressure. And this year, the good monsoon hopefully should help some recovery. But as I said, a low single digit for 6 to 7% growth in tractor industry volumes doesn't pair well for a tractor only business like Escorts. If you look at M&M, there are other businesses, the SUVs, the passenger vehicles, that is something that is kind of doing well and that is helping them kind of counter-cyclical in terms of the tractor business. So we are not that positive on the overall Escort space. I think we currently have a neutral rating. Within that space, we like M&M, that is our preferred pick. But among the entire auto pack, the most preferred pick right now is the two-wheeler space, in which Hero Moto clearly stands out in terms of valuation, in terms of growth, and also to play the rural recovery expected post-monsoon.
So we let it go on that note. Let's quickly get in some closing trading ideas as well as we reach the half an hour or rather halfway mark to the last lap of today's trade. Kunal, what's on your list?
So I'll go with the man Bajaj Finance. That's a stock which has made a very strong comeback, almost like a V-shaped recovery for the stock, and indicative of a major up move which could be coming into the stock in the near term. So that would be a buy.
Right. Naresh, what about your closing trades?
So that would be a contra-buy in Reliance Industries. And the stock has made a bottoms around 2880, 2885. For the last 1 month, the stock is closer to 2900. So a small 20-point stop loss from here and expecting a bounce back towards 3000 at least.
Let's take a very quick break on that note. It sort of resurrected from that dip. It almost seemed like we're going to completely give up all of our gains. Still pretty tentative. Let's see how the last half an hour in trade today actually pans out. Still flat actually, stand corrected, but just about surfacing around that 22,400 level. We're closing trades right here on ET now. Metals, while of course it is the high-flying sector with names like SAIL tearing up almost 8%, NMDC up 6% in trade. There's JSW Steel, Hindalco, Jindal, Nalco, Tata Steel. The entire sector or segment is a buzz. Throw in a Hindustan Copper, which has been a very, very big outperformer, or a Vedanta as well for that matter, which is holding up 2.5%. But the index has cooled off definitely from the top of the day. Under pressure, of course, the entire technology basket, some of the FMCG plays, ITC, Nestle as well, not participating at all. And Reliance is now down almost about 0.5%. So that alone is weighing heavy on the index as we speak. Regardless of that, a lot of volume buzzers in trade within the F&O segment in specific. Ansh is here with the list. Ansh?
Right, so Chennai Petro will be the first stock in focus as the stock has given a breakout from its rough cup and handle chart pattern, touching record high level as well. Also, the breakout was backed by a huge volume of 14 times its average volume of last 10 sessions, registering biggest single session gain in over 3 months. Apart from this, ICICI Prudential will also be in focus as the stock has actually given a breakdown from its upward sloping support trend line, touching 1 month low level with volume of over 3 times its average volume of last 10 sessions. MRPL is also in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, surpassing above 50 DMA with volume of over 9 times its 10 session average volume. Lastly, Orient Cement is in focus as the stock has actually given a breakout from its double bottom chart pattern, registering its biggest single session gain in over 8 months with volume of over 6 times its average volume of last 10 sessions. So these were the breakout stocks based on price volume action.
Right. In the mid-tier cement space, Orient is of course a big one. Kunal, anything which looks good? Mangalam, Orient, India Cement?
So India Cement is something which looks attractive. Mangalam Cement, I think the stock is already at a 52-week high, I think around 880 plus mark. More of a stable uptrend for the stock. But again, I think has done reasonably well. In terms of the prospect going forward, I would probably believe India Cement is something to watch out for, because it's very rare to see this kind of a stock underperforming for a prolonged period of time. And I think we've seen the stock underperforming from 290 to 295. I think that was the recent high for the stock. It's come back to the 200 levels and now just about forming a bottom at this 220 odd mark for India Cement. So I would believe that at current levels the risk reward could be attractive for the stock.
Okay. All right. India Cement, actually I was looking at it. It topped out near 280, 290 and then has come back to 220. It's also one of the, it's seen as a takeover target by some on the street. But Devang Mehta is also joining us now from Spark Private Wealth. Devang, how are you looking at the markets? What are you recommending your clients?
Thanks, Ajay, for having me on the show. I think, yes, very clearly we are seeing that markets have again regained the bit of mojo which it sort of had lost during the March fall. And I think there were a lot of theories which were going around that this is the start of the next big correction, but that honestly was not the case. And we sort of were trying and sticking our neck out and saying that this is sort of a good opportunity. That a lot of last right from September to Feb, there has been corrections, but that has not lasted long. March correction was a bit deeper. April also we saw a bit of snippet of correction, but I think there is so much of liquidity waiting on the sidelines. The numbers season has also started. Look at any number. Look at even the guidance given by some of the managements, and also the updates, the regular business updates which start during the start of the quarter. I think mostly things seem to be hunky-dory. Look at the GST collections or macros, other macros, PMI data. My sense is that there is not going correction which is going to come. Is it the start of a pre-election rally? It seems so. Whether I think market is expecting political continuity and sort of policy continuity rather to go ahead. It seems like that. Plus El Nino getting transferred to La Nina, that's also talked about. Monsoon would be good. My sense is that there is not a larger correction which is right now waiting. But yes, it's now important to differentiate the man from the boy. So can't get along with anything and everything. You need to be a bit selective in sectors and businesses when you're buying.
Right, okay, that's the take coming in on the market right now. In fact, we had, actually no, before that, let me highlight and keep our focus on earnings, because that's where you are seeing the, the reactions coming in thick and fast. And Bajaj Finance is going to be a very important earnings set come tomorrow. So let me take it across to Snehi and find out what the ET Now poll is penciling in. Snehi?
Well, yes, a good set of numbers is expected this time around for Bajaj Finance, both on the top line and bottom line. Let's take a look on the consolidated basis. Net interest income is seen roughly at 8,077 crore rupees, which is up 29% on a year-on-year basis. PPOP also seen at 6,738 crore rupees, up 31.5% on a year-on-year basis. PAT is seen at 3,661 crore rupees versus 3,157 crore rupees this time last year, which is an uptick of 16%. And NIMs, however, slight bit of a contraction is expected on the NIMs front. They're being penciled in at 10.3% versus 10.5% on a year-on-year basis. When you look at asset quality, a sharp improvement is expected in return on assets, because that is being seen at 12.6% versus 4.9% sequentially. So big jump over there. However, return on equity is expected to see a slight bit of a dip at 19.6% versus 22%, and provisions are expected to go up by 4.5% sequentially as well. Now, in their Q4 update, the company has said that their FY24 AUM is expected to grow by 34% on a year-on-year basis. Deposit book also expected to grow by 35% on a year-on-year basis. Now, what can we expect largely from these numbers? NIM contraction is likely to continue. Provisions are expected to rise nominally. Cost to income ratio, however, is expected to remain steady. Credit costs are expected to decline nominally by 5 bips this time, and cost of borrowing, on the other hand, is expected to increase. Key monitorables now will be the growth trajectory going ahead, asset quality in its unsecured portfolio, RBI actions on EMI as well as the e-com cards, management succession and transition plans, and listing of the housing subsidiary. But overall, well, yes, a healthy set of numbers expected from Bajaj Finance for Q4.
All right. In fact, pull up the last 3-month chart. You would see that Bajaj Finance has rebounded very sharply. Bajaj Finance, Poonawalla Finance, pull up Ugrow Capital, last 3-month chart. You would see that the peak of pessimism. In fact, even IFL Finance from a 380 level, that was the lowest from the RBI glare levels, I would say. All these stocks have rebounded, and the Q4 updates have been good. So watch out for Bajaj Finance. Devang, you have an eye on some of these technology or tech-backed lenders. Do you like any of them?
Yes, I think yes, Bajaj Finance, of course, though a bit expensive, has been one of our favorite as such. We know that the valuations are a bit expensive, but honestly, out of 4 quarters, 3 quarters, Bajaj Finance does deliver, and there is always a scare in one of the quarters that it would sort of miss the target. And given the expensive valuations, there is hardly sort of any slippage if that occurs that makes the stock correct. But to be very fair, right now, there are so many pockets of the market where the valuations were inexpensive, though they are also sort of getting expensive. But the capex part of the market, the discretionary consumption part of the market, credit growth related another ideas into wealth management or broking or EMC space, or typically even banks have not done well so far. The private banks have not come out of the sort of hibernation they were in the last 1 year. So yes, Bajaj Finance remains one of a good idea to sort of bet into, but there are so many pockets inside the financials as well as the if you just get into and sort of get into the NBFC universe as well. So yes, Bajaj Finance, Bajaj Finserv. In fact, Bajaj Finserv being a holding company for Bajaj Finance and also the insurance arms, be it general insurance, be it even life insurance, offers a lot of comfort to a lot of investors.
Okay, that's the take coming in on Bajaj Finserv as well as finance. Well, we had a very interesting discussion earlier today with Nilesh Shah from Envision Capital. And he talked about as to how he has a concentrated 25, 30 odd stocks kind of portfolio and very diverse within that. Here's what he actually likes and holds within his portfolio.
We've been owning KSB, which we've partly exited. We've been owning a TD Power. We've been owning Jash Engineering. So all different plays. I mean, somebody's a play on energy, somebody's a play on the water segment, somebody's is a pump company with essentially opportunities in nuclear power. So we've been playing a whole basket out there, and then on and off we've been owning some of the defense companies as well. So I think we have been essentially having a fair share of the portfolio in that segment. We've been owning some of the autocom companies as well. What we have at least done is we've tweaked a bit and see, instead of owning just a handful of stocks or running a super concentrated portfolio or even a concentrated portfolio, we're running a slightly more diversified portfolio. We no longer are just owning 10 or 15 names, we're probably owning 25, 30, 35 names, okay? So as to make the most of the emerging opportunities, and that I think purely is a outcome of the broad-based economic growth. The tier 1 has surely disappointed, but one should not be too disappointed with them because they have grown and they are a services company. So to that extent, I think they have essentially played to their potential. But the tier 2 segment in IT services, I think they have been champions.
Very selectively, but they've
so many companies which have created products which have been focused on niche segments. They have, I think, been phenomenal.
And your favorite there is?
I would still think, I mean, in the past it used to be Tata Elxsi. That used to be a huge favorite. Obviously, because of valuations and all of that, we kind of exited. My current favorite, even from a potential point of view, is LTTS.
All right. So on the one hand, there's a lot of talk around the ingredients of baby food, etc., and then Nestle as a company in the middle of it. But results season is also there. So what exactly to expect from this quarter? Vinny is here with more on that.
So yes, in terms of numbers that are expected from Nestle, it's the March ended quarter. Do not forget that this time they're changing from calendar year to financial year. So yes, we are keeping the March ended quarter in focus. Standalone numbers, what we look at, 7% growth, a decent growth in terms of overall the revenue of the company, profits of the company, a strong growth, a double-digit growth of 15% for Nestle, while margins expected to see a sharp improvement, 24.1% versus 22.7%. So yes, around more than 150 basis points in terms of improvement in terms of the EBITDA margins of the company. Volume growth expected at 3 to 4%. So let's keep an eye out on that. This high revenue growth is because of the distribution expansion that they've been focusing on. They're focusing on the rural strategy as well. So those initiatives they've taken over there is something that could work out well for overall Nestle's numbers. Now, we're keeping an eye out on the chocolate as well as nutrition segment. That's expected to see a steady growth. International business likely to see a bit of a decline there. While obviously in terms of margins, keeping an eye out on that. YOY, we're seeing an improvement. Sequentially, because we've seen those costs seeing an increase on a sequential basis, maybe we could see a reduction there. Now, let's keep an eye out on raw material cost commentary. What are they seeing in terms of the pricing going forward? Other than that, commentary is going to be important in terms of the rural players. How is that shaping up? Rural versus urban and regional players is key to watch out for. And any special commentary on the baby food segment, given that there were concerns around the sugar in the food content, that is something key to watch out for from Nestle.
Okay, that's the preview on Nestle right now. Devang, just wanted to understand what your tilt in the market is right now. We talked about your favorites, but is FMCG really part of that list? Because, again, the concern still looms large on a meaningful or material rural recovery.
exactly. You sort of got it right that FMCG has sort of underperformed the entire market. If you look the last couple of years, be it HUL, be it Nestle, be it other businesses in the similar domain. Yes, there are certain exceptions which have done very well. But yes, to give a 60-65 type of a PE to a company whose volume growth probably goes 5-6%, there's no way saying that the franchise has created great wealth for investors over a period. A lot of these franchises have created a lot of wealth, but right now there are so many pockets in the market which can outperform this on a return basis for the next 2-3 years, and are also inexpensive in valuations. Yes, to answer your question, consumption, if I can bucket into two parts very clearly, one, the non-discretionary part, which is suffering right now because the rural recovery has not been as sharp. There is discretionary or upper end luxury consumption, which is where the money is right now going. There is a lot of smart allocation of money which has happened from this end to this end, not only on the stock prices, but also as India aspires more, as India sort of grows more, more disposable incomes are with people. The spending is huge. Look at the ARR for a company like EIH, a hotel company like EIH. 18,000 rupees is the ARR, right? So there is religious tourism, spiritual tourism, inbound, a lot of such tourism initiatives where hotels are expanding. The supply right now is probably at around 4-5% the rooms, and the demand is around say 10-11%. So this supply mismatch, demand supply mismatch, plus a lot of companies using their operating leverage, I think, and companies are also getting less and less debt. So they are reducing the debt burden as well. So I think this part of the market where people are graduating from cars to SUVs to even the luxury end of the consumption, that is where I think most of the money will be made. Companies like Titan, companies like Landmark Cars, just giving certain examples.
Premiumization trend is clearly going to continue, but what is it that we can expect from IndusInd Bank when it declares its numbers tomorrow? Gaurav is here with the poll.
Well, yes, IndusInd Bank will come up with the numbers tomorrow, and if you look at the numbers and the estimates, the net interest income is expected to increase almost by 7.5%. PPOP may increase almost by 9.7%, and a little bit of decline in the increase of PPOP could be because of the high cost of debt that we have seen for the bank. But apart from that, provisions are expected to decline, and that is the reason why we may see PAT to grow almost by 15.5% on a YY basis. Apart from that, banks' high yield segments and repayment of high cost borrowing can actually help the bank to offset the effect of higher cost of deposit, which may actually result into net interest margin remaining at stable at 4.3%. And apart from that, Street is not actually estimating any kind of risk in the asset quality. In fact, they are estimating credit cost to remain stable, or rather decline a little in this quarter. If we look at the provisional data from the bank, we have already seen that advances grew almost by 18.3%. Deposits growth was at 14.4%. Now, this deposit growth was actually lower if we compare it with the other private sector banks. But in this quarter, we saw 2.7 crores of outflow from retail deposit because of the regulatory actions against a fintech partner for IndusInd Bank. And because of this deposit was at 14.4%. So, any kind of commentary coming up from bank on how the deposit growth will remain will be a key watchable. And apart from that, any kind of commentary on cost of funds, and if the loan growth, which we have seen at 18.3% already in this quarter on a YY basis, if that can sustain, and if any kind of commentary coming up from the management on that front is going to be important for IndusInd Bank from here on. So definitely watching out for how management talks about the commentary coming up on IndusInd Bank.
That is one stock in focus ahead of the results. But one stock which has suddenly shot up, Nuresh, is PB Fintech. Pull up the intraday chart of PB Fintech. Almost 3% higher now, almost went to 5% at one point in time. Yes, look at that. So PB Fintech is in focus because there is a news report, as in fact it's a fact, that from 1st of April onwards, health insurance will be applicable on all senior citizens. Earlier, there was a cap on age. Now age limit is gone. So the sense is that possibly volumes for companies such as PB Fintech will go higher. But we'll talk charts right now at 1228 odd. Nuresh, how does this one look?
At current levels, the risk reward is no more great. The stock was a buy at 650, 700. The reason being, if you look at the listing date, the stock had made a trading range of 1300 to 1400, 1450. And what we see is when stocks, after falling 50%, 60% from the top, come back to the same IPO prices, tend to spend some more time over that. In the previous spike a few days back, the stock went to 1350, 1400 and dropped all the way to sub 1200 levels. So for now, very similar structure we've seen in a lot of new age companies. So some bit of timing to be spent here at 1200 to 1400. So I would wait it out. It's a hold, not a buy at a current level.
Coming in on PV FinTech. In the meantime, let's just take stock of what else is happening. Look at Idea. You know, although it started off the day very well and you saw a smart follow through from yesterday when the FPO closed, today Idea is quite a drag. It's a 9% downtick that you're seeing on the stock. I think it's in F&O band today as well, if I'm not mistaken. Yes, it sure is. 1310 is where that stock is. Kunal, wild gyrations on the stock. What's next?
Yeah, the F&O ban is the only reason why the stock has not seen any follow through, and that happens with many of the stocks. Now, just as a contra example, Biocon today is out of F&O ban, or was out of F&O ban yesterday late evening, which means and that's why you've seen the stock outperforming and bouncing up higher. So I think that's a typical feature for stocks which are in the F&O segment, and that generally hampers the stock price trend over the near term. And that could also mean that potentially, if IDEA continues to remain to this F&O ban, the stock may just about linger around this 13 mark, maybe 12, 12 and a half, or I think 11.65. That was the low the stock had hit 2 days back. That could be maybe retested in this leg of downtrend for the stock. And then 14, 14 and a half, which was the level the stock hit yesterday, that could act as a resistance.
Okay, that's the call coming in on Voda Idea. In the meantime, let's also get in some BTST trades going. Naresh, what's on your list?
So first would be a buy on Reliance Industries itself. The stock has come back to the level where risk reward is good. Stop loss at 28.80, target price of 29.50. Second is a buy on NMDC, fresh breakout, new 52-week higher. Stop loss at 243, target price of 254.
Right. Kunal, what about your BTST ideas?
So I'll go with first one, a buy on IEX. That's a stock which is heading towards a breakout above 153 mark. It's a very classical inverted head and shoulder pattern for the stock. So would suggest a buy with a target of 175. Stop loss could be kept at 145. And second would be a buy on Dixon. That's a stock which is coming back towards a breakout mode. We highlighted this at 7,650 levels for the stock price. It's crossed the 8,000 mark today. So would suggest a buy with 8,500 as a revised target. Stop loss at 7,800.
Okay. Just want to see what a Tejas Networks as well is up to. Remember, the stock has already clocked in a good 40% in just the last 2 trading sessions. A, in the run-up to the earnings, and then B, post-reacting to its earnings. But today is not really seeing a, smart follow-through. Very strong earnings, led, of course, by BSNL's 4G project execution. I don't know if you have the management bite, because we did speak with the management as well. In fact, first, let's listen into that, and then we'll bring on board Devang on this.
We normally don't give guidance on margins, but we'll always strive to build better products, cheaper, and manage our expenses. And that's going to be the focus of the company.
We see a good pipeline of business opportunities coming in the coming year. In India, of course, there are a lot of 5G upgrade opportunities which are there, as well as the expansion, the investments in terms of broadband, in terms of upgrading the backbone capacity of the private operators as they expand their broadband services and the 5G networks. So those are all great opportunities for us in India. Then there is BharatNet, which is again a very strong opportunity where we have very relevant products. That is just in India, but internationally there is a lot of focus in growing our business, and similar kind of opportunities of products where we leverage the broadband expansion that is happening in US, Europe, as well as the 4G, 5G developments which are peaking in a lot of the emerging markets across the world. So those are all great opportunities for us, which we want to leverage fully during this current financial year.
Yeah, so look, we don't normally give guidance, so I can't give you a number, but all you can expect is that we will continue to execute flawlessly. The supply chain is managed extremely well, under good control. And then we have a healthy order book, so you can expect us to execute that order book and add more to the kitty as we go.
In fact, not just Tejas Network, but we also spoke with the managements of transformers and rectifiers, as well as Bajaj Auto, to hear out what they told us about where the future growth for the companies is going to come in from.
We intend to put up a facility for the fabrication of the transformer tanks, which are in shortage worldwide. It's not only in India, but throughout the world, people are facing the problem. The prices have jumped by almost 50 to 80%. We are putting up one automatic line for manufacturing, which will increase our capacity from 250 tons to something like 700 tons. And after establishing that and after maturing there, we'll put up another line within another 6 months. For this, we don't want to rely on the bank. We will infuse more equity in the company so that, we become almost debt-free. That's what our intentions are. The majority of the growth will come from the renewable. And we are now, trying to get into that business in a big way.
Domestic market is turning in a nice growth. We expect the markets to be growing at about 7 to 8% in the coming year, with the upper half of the industry growing at perhaps 2-3% points more, and the bottom half growing at 2-3% points less than the average of 7 to 8. Is some new markets and new segments which we are entering. Brazil is going to get unlocked with the local plant coming on stream in June. And, we are expanding our footprint in Europe next month. I would say that FY25 can be expected to be better than FY24 in exports.
Okay, let's begin winding up for the day then. Devang, we let you go on that note. Kunal, Naresh, good having you in the show as always. Heineken, and look what kind of an impact it's having on the stock UBL. That's closing in at the session highs. It's up, I think, over 9% now as we speak. Heineken has said that its India business, that's UBL, has seen a 20% year-on-year growth in the Jan to March quarter, and that's clearly rubbing off on that stock. Okay, I stand corrected, not just 9%, but it's a mammoth 10% move that you're seeing on UBL in today's trading session. Having said that, for the index, it's been much of a quiet day, even though we did have global support come by today, and even Europe has started off on a decent note, but you can't see much of that enthusiasm rub off on the index. It's pretty sedate. 22,405 is where we're shutting shop for the day. Tata Consumer, of course, has seen disappointing a move after its earnings, so that closed in lower by 5.25%. Technology, of course, has had another down day. There's TechM, which is slated to come out with its numbers tomorrow. That's going weak into its numbers, 1% lower there. Infi, TCS have been the other laggards. Reliance pushed lower by about 5%, or rather 0.5%, I beg your pardon. Bharti as well was in the red in today's trading session. But on the flip side, it was metals which has been the strongest show today. So be it SAIL, NMDC, JSW Steel, Tata Steel, they've all powered ahead, along with, of course, Hindalco very, very smartly in trade. Axis Bank is due to report its numbers today. Let's see where it goes home then. Holding strong by about almost 1% for Axis Bank. And Cipla, after that Investec upgrade as well, has been a very smart performer, almost a 4% notch up on that stock as well, touching that 1,400 rupee per share mark. That's pretty much it on this edition of Closing Trades. Thanks for watching.